Hello guys, welcome to part 7 of True SMC from A to Z 2026 edition, and in today's video we will be learning about engineering liquidity. And so without further ado, let's dive in. Okay, so let's start by defining what engineering liquidity is. Engineering liquidity is the liquidity resting above the high or below the low of the valid pullback right before the extreme POI. So we all know that, or as we discussed earlier, we all know that a POI can either be a valid order flow or OF or order block. So in this case, by extreme POI, what am I referring to? I'm actually meaning the extreme order flow. However, if it is not present in the dealing range, of which we all know that some dealing range, the order flow are mitigated, then we'll be using the extreme order block, or the extreme order block will now be considered. Okay, so with that said, then let's solidify things on this chart here. So we can clearly see price has taken out the inducement. You can clearly see more buy side liquidity, and then later reversed back and made a break past this swing point low. So this is what we call the bearish break of structure. And then this means we have our dealing range starting from that high all the way to this low. Okay, so now we have our dealing range or our trading range or our impulsive leg. So now it's time to mark the order flows and the order blocks, or in that case, the POIs. Okay, so as usual, we start from the extreme, and we can clearly see that this extreme order flow is invalid as it is already mitigated. So that's a mitigated order flow, and the order flow that comes after it, it's this one here. And we can clearly see that this order flow is yet mitigated. So this becomes a valid order flow. Okay, so we'll be continuing to mark the order flows all the way to the low of our dealing range. We can clearly see this here, it's mitigated. So if it's mitigated, it's invalid, it's of no use to us. And we can clearly see this one here also mitigated. And the one that comes after that, it's this one here, and we can clearly see it's not mitigated. So this one here is, of course, an unmitigated order flow, and that means it's valid, of course. And the order flow that, okay, so you can clearly see it's this one here. And in this case, this order flow is before the inducement, so it's already an invalid one. Okay, so we can clearly see our inducement. It's this one here, that is major inducement, and price has yet taken that. But if we can clearly see here, we see that this one here is the extreme order flow, as it is the farthest order flow at the origin of the dealing range. I mean the farthest unmitigated order flow at the origin of the dealing range. And we can clearly see this one here is the decision order flow, because it is the order flow. Or if I do this, we can clearly see that this one here is the opposing move before price made that reversal displacement that ended up breaking the structure. So we can clearly see the reversal displacement that continued all the way towards the break of structure. And so this means that this one here is the decision order flow, and this one here is the extreme order flow. So these two order flows don't change no matter if price takes this inducement from now here or going forward. If price takes out this inducement or not, these two order flows remain to be the ones valid. Okay, so let me get rid of this messy, or I mean this theory part here, so that we can now focus with the chart. Okay, so we can clearly see right here, if I continue running price headed higher, you can clearly see that, and price has already taken out this, you can clearly see exactly right here that price has already taken out the major inducement. And we can clearly see this one is an SMT. Price gave the reaction to lure the early sellers, but you can clearly see eventually price stopped them out and it's heading towards the valid zones. Okay, so this one here is our swing point low, and yeah, so right now we can clearly see price has mitigated our decisional order flow. This one is our extreme order flow. In this case, the order flows are present, so this means that the engineering liquidity then is this one here. I mean this one, because this one here is the valid pullback high right before the extreme order flow. And like I said, the engineering liquidity is the liquidity resting above this high of this valid pullback right before our extreme order flow, as in this case the order flows are present. Just like for the inducement, we know it's the liquidity resting above the high of the recently formed valid pullback. The same is for this engineering liquidity, is the liquidity resting above the high of the valid pullback that is right before. The keyword here is right before our extreme order flow. But remember, I said that if the order flows are not present, or let's say the extreme order flow is not present, or the order flows are mitigated, in that case, this means that our extreme PY will be an order block, and it is the one that we'll be considering. Okay, so in this case, this one is our engineering liquidity. Our major inducement is already taken out. This one is our decisional order flow, and this one is our extreme order flow. If I am to mark the order blocks here, okay, so let me get rid of these ones so that we can have a nicer place to mark the order blocks, right? Yep. So let me get rid of this. And right here, if I am to mark the order blocks, of course, we can clearly see that this one here is the decisional order block. Yep, we know that the decisional order block will be present inside our decisional order flow. So yeah, this here is the decisional bearish order block. Yep, exactly right there. And of course, the extreme order block, it will be present inside the extreme order flow. So you can clearly see once you mark the order flows, it becomes easier to mark the order blocks. I mean the valid order blocks. So this one is the extreme bearish order block. And exactly right there, we have our valid zones or POIs in that case. And if I am to continue running price, exactly right here, you can clearly see the reaction from the decisional part, and later price can clearly see it failed that reaction and came towards our engineering liquidity exactly right there. And you can clearly see after price has taken out the engineering liquidity plus mitigating our extreme order flow right there, you can clearly see this reaction probably after seeing these two pin bars here onto our favor. Stop loss, of course, above that high, and of course, we'll be targeting the external liquidity. And if I am to run price, you can clearly see price is heading onto our favor. Exactly right there, in no time, price hit our exactly. So this here is a bearish scenario, and in this case, we were involving the order flows. So now let's get to another example whereby now there is no any order flows, but rather just order blocks. I mean, where the order flows are already mitigated. Okay, so this is a bullish example, and we can clearly see exactly right here, price has taken out this low and price reversed back, making a break past the swing point high. So this means this one here is our break of structure. Okay, so we can clearly see that this one here is our inducement. Price has already taken that, reversed back, breaking past our swing point high, exactly right there, and that's a break of structure, a bullish break of structure. If I am to mark the inducement, you can clearly see it's this one here, as it is the liquidity resting below the recently formed valid pullback, and we can clearly see that it is. And right now, before I mark the order flows, yeah, price can actually decide to create another valid pullback here. So let me just run price and see. Okay, so exactly right there, you can clearly see price has taken out the inducement exactly right there. And so right now, it's time for me to mark the POIs. So this one here is our trading range high, and yeah, so if I am to use these swing points, you can clearly see that these, okay, so this here is a bull swing point, and another swing point, of course, it will be here, and that's our dealing range. Of course, should I draw a line here? Okay, doesn't matter, just for learning purposes, let me do it. And of course, the high that price broke for the break of structure is that one. Okay, so we have the major inducements being taken out, and right now we can actually mark the order flows, and we can clearly see that this order flow here, it's already mitigated. So what does this mean? It's actually invalid. It's an invalid order flow, and the order flow that comes after it, it's this one here, and we can clearly see it's also mitigated by the pullback that made us our valid inducement. And we can clearly see the next here, it's the one that comes before the inducement, and we all know that is a smart money trap. So in this case, we don't have any valid order flows or the extreme order flow in that case. So now how do we identify the engineering liquidity? Okay, like I said, this is where now the extreme order block is used, because in this case our extreme POI is none other than the extreme order block. So right now let's mark the order blocks, and of course we can clearly see, if I am to start from this side, you can clearly see that this one is our extreme order block, because it is the one associated with the fair value gap. Even though it's not the one that took this low, you can clearly see it is the one that is associated with a fair value gap. So we'll be shifting to it, and that becomes our extreme bullish or B. So exactly right there, that's our extreme POI. And of course, the liquidity resting below the valid pullback low right before the extreme POI, of which it is the extreme order block, then in that case becomes our engineering liquidity. And so the one that I marked is the one that is the engineering liquidity, or is the one that becomes the engineering liquidity. And you can clearly see exactly right there, price is reversing after it has taken out that engineering liquidity. You can clearly see our extreme POI is intact there. Price is already giving that reaction, and I have no doubt that price can actually continue from here. I mean, all the way towards the external liquidity, because this engineering liquidity is a core liquidity, just like the inducement. So you can clearly see this one here is our major inducement. And so just like the engineering liquidity, and so just like the major inducement, the engineering liquidity is also a core liquidity. And once price has taken it out, it can actually reverse without mitigating the extreme order block. And if I am to run price exactly right here, we can clearly see that price gave that exactly right there, and price made it out to the, can clearly see price made it out to the external liquidity without mitigating the extreme order block. And now we have covered the two core liquidities that are available on the dealing range, and that is the inducement and the engineering liquidity. And just like the POIs, those two core liquidity levels, once price has taken them out, even without mitigating an extreme POI, price may reverse ultimately from the takeout of them. Okay guys, so today it was all about engineering liquidity, and I want to believe that you have learned how to identify them. And so in the next video we'll be learning about the entry modules, the most awaited part, and of course you will never want to miss the next part, that is the entry modules. So do yourself a favor, True, and subscribe to the YouTube channel if you have not, and I will see you in the next video.